Folks, the stock market has been going through a rough patch lately, and while a lot of people are nervous and unsure about what comes next, there are a few companies that are quietly showing steady progress in the background. These aren't just your random hype names. These are real businesses reporting gradual revenue growth, improving operations, and gaining attention at a time when most investors are focused on the broader volatility. And for anyone who follows emerging companies or likes keeping an eye on early-stage opportunities, these are definitely worth watching. So in this video, I am going to tell you about 3 companies trading under $5 that I believe could perform exceptionally well in this rough phase. So if you're serious about investing and want to position yourself early in companies that could see substantial gains, make sure to watch this video till the end. And if you are new here, make sure to hit that subscribe button and turn on notifications so you never miss an update on the hottest stocks in the market. Let's aim for 500 likes on this video so more people can reach and benefit from this info. And remember, folks, this video is for educational purposes only. I am not a financial advisor, and this is not a financial advice. Always do your own research before making any investment decisions. Now, let's get into it. The first penny stock to watch closely in 2025 is Ambev, trading under the ticker symbol ABEV on the New York Stock Exchange. Currently priced at just $2.55, making it easily accessible to everyday investors, yet its financial foundation resembles that of much larger global corporations. Ambev is a company that produces, distributes, and sells beverages across Latin America and Canada, including carbonated soft drinks, beer, and a variety of non-alcoholic products. Its operations are massive in scale, reaching millions of consumers across Brazil, Central America, the Caribbean, and Canada. What makes Ambev unique is that despite being considered a value stock, its business model is diversified, stable, and deeply embedded in economies where beverage consumption remains incredibly strong, even in recessionary periods. People drink beverages during good times and bad times, and that creates a natural stability in Ambev's revenue stream that many penny stocks simply don't have. Ambev's recent financial performance reinforces that stability. The company reported fiscal Q3 results showing a 1.2% increase in net revenue organically, which may seem modest at first glance, but the key detail is the 7.4% increase in net revenue per hectoliter. This demonstrates strong pricing power and a continued shift toward premium beverages with higher margins. Premium and super premium brands grew more than 9%, which is significant considering the pressures consumers face from inflation. When people continue buying premium goods in tough economic times, it usually means the brand has deep loyalty and durable demand. In addition to revenue strength, Ambev delivered a 2.9% increase in normalized EBITDA and a 50 basis point expansion in normalized EBITDA margin, reaching 33.9%. These improvements speak to the company's strong cost control and ability to maintain profitability, even as currency fluctuations and input cost volatility remain challenging in Latin America. Gross margin also expanded slightly to 51.5%, reinforcing the theme of operational efficiency. The company continues executing well, which is why they've authorized a 2.5 billion Brazilian real share buyback program. This is extremely bullish for a penny stock, because companies that lack financial strength do not buy back their own shares. Ambev also announced 6 billion Brazilian reais in dividends for the year, further proving its ability to generate consistent cash flow. That cash flow metric came in strong again this quarter, with 6.9 billion reais from operating activities, despite the temporary pressure from higher cash taxes. The digital and e-commerce side of the business is where Ambev is positioning itself for the future. The company's marketplace GMV surged 100% to an annualized 8 billion Brazilian reais, showing the benefits of integrating logistics, technology, and consumer behavior. Meanwhile, Z Delivery, Ambev's rapid delivery platform, saw 7% GMV growth, giving the company a powerful direct-to-consumer channel that many competitors simply don't have. Combined with expanding margins, increasing premium product adoption, high dividend payouts, and a strong buyback program, analysts believe Ambev remains undervalued. With the stock priced near $2.55 and already up over 37% year-to-date, many investors see room for further upside as the company continues delivering strong results. Ambev may not be a flashy tech play, but its financial consistency, global scale, and resilient demand make it a compelling penny stock to watch in 2025. The second penny stock to watch closely in 2025 is Clarivate plc, trading under the ticker symbol CLVT on the New York Stock Exchange. Currently trades around $3.46, and while the share price has bounced around over the last few years, the underlying business has been undergoing a major transformation that many investors believe could unlock long-term value. Clarivate operates a unique and highly specialized business model that focuses on providing global information, workflow solutions, analytics, and data services for academic institutions, governments, intellectual property professionals, and life sciences companies. This is not a flashy industry, but it is an essential one. Universities, patent offices, pharmaceutical researchers, and government agencies rely on Clarivate's platforms every single day for critical decision-making, publishing, evaluation, and regulatory processes. Once these organizations integrate Clarivate's software or data into their operations, switching providers becomes extremely difficult, which creates sticky recurring revenue. Clarivate's recent financial results reflect both the challenges and the improvements happening inside the business. For fiscal Q3 2025, Clarivate reported $623 million in revenue, essentially flat compared to last year's $622.2 million, but the surface-level number hides the real story. Over the past year, Clarivate divested several non-core operations, meaning last year's results were inflated by businesses that no longer exist within the portfolio. When you look at the 9-month results of 2025, revenue fell slightly from $1.893 billion to $1.838 billion, primarily due to these divestitures. However, organic performance actually strengthened. Organic recurring revenue grew 0.6%, and total organic revenue rose 0.2%. While these numbers aren't explosive, they show that the core business is stabilizing and beginning to trend upward. Management raised full-year revenue guidance, signaling confidence in rising transactional book sales and the favorable impact of a weaker U.S. dollar. This upward revision is important because companies rarely raise guidance unless they expect sustainable improvement. Analysts took notice as well, with Goldman Sachs lowering its price target slightly to $4.20 but keeping a buy rating while William Blair maintained a neutral stance. The fact that analysts disagree often indicates that a stock is undervalued relative to its future potential. As Clarivate focuses on deeper integration within research institutions and intellectual property networks, investors see it as a company that could rebound strongly once growth accelerates. With its current price of $3.46, strong cash flow, debt reduction, and rising recurring revenue, Clarivate remains an intriguing recovery stock heading into 2025. The third and final penny stock to watch closely in 2025 is NUVB Bio Incorporated, trading under the ticker symbol NUVB on the New York Stock Exchange, currently trading around $4.86 and has already surged 82% year-to-date. But many investors believe the stock still has substantial room for growth due to its rapidly scaling commercial operations and strong early results from its flagship oncology therapy. NUVB Bio is a biopharmaceutical company focused on innovative cancer therapeutics, and its most important commercial asset right now is ibitrazine, also known as taletrectinib. This next-generation ROS1 inhibitor is used to treat ROS1-positive non-small cell lung cancer, a niche but critical area of oncology. NUVB Bio's recent performance has exceeded expectations. On November 4th, Citizens significantly raised its price target on the company from $6 to $8 and reiterated a market outperform rating, citing strong commercial traction and impressive early data from ibitrazine Q3 2025. NUVB started 204 new patients on the drug, outpacing other recent ROS1 inhibitor launches. This is extremely important because oncologists tend to be conservative when adopting new therapies. Rapid adoption typically means the drug is showing strong real-world effectiveness and physicians are gaining confidence in the treatment's durability and safety profile. Financially, NUVB Bio posted $13.1 million in total revenue, with $7.7 million coming directly from net product revenue tied to ibitrazine sales. This commercial revenue is still in the early stages, but analysts are already projecting future growth based on patient onboarding rates. With prescriptions written in 98% of the company's 47 sales territories and payer coverage extending to more than 80% of covered lives, NUVB is achieving rapid national penetration. Using current patient volumes, analysts estimate more than $55 million in annualized revenue potential from ibitrazine, even before accounting for potential label expansions or international sales. Another major strength of NUVB Bio is its balance sheet. The company ended the quarter with $549 million in cash equivalents, and marketable securities. For a biotech company, having this much cash is incredibly rare, especially during commercialization. It gives NUVB a long financial runway for research, commercialization, and growth without needing to dilute shareholders. R&D expenses totaled $28.8 million, and SG&A expenses reached $37.4 million, both manageable numbers given the size of the company's cash reserves. NUVB's risk-reward profile is what makes it so compelling for 2025. On one hand, biotech stocks are naturally high risk due to regulatory hurdles and scientific uncertainty. On the other hand, NUVB already has a commercial product in the market, real revenue, strong early adoption, and a massive cash position. With upgraded analyst targets and an expanding oncology footprint, NUVB Bio is positioned as one of the more promising biotech plays under $5 heading into 2025. To wrap things up, These three penny stocks each offer a completely different opportunity for 2025. Each comes with risks, but in return, big reward. If you enjoyed this breakdown and want more deep dive stock analysis like this, make sure to hit that subscribe button, turn on notifications, and stay tuned for more updates.